Splish Splash is art is a center that offers children's music and dance lessons. Splish Splash prepares annual financial statements and has a December 31st, 2017 year end. On September 1st, Splish Splash collected 15,000 cash for dance lessons running from September 1st to December 31st. So it's asked us to record the initial journal entry and the adjusting entry. So let's start with the initials so as we go. So on September 1st, what accounts are being affected? Cash. And yeah. I'm going to call them lessons revenue. Just in case we... Oh. Sorry. No. Got ahead of myself. Have we done any work yet for this 15,000? No. So what is it? Unearned revenue. This is why it's always better to take a second and write in the margins and figure out what you need to do before you start. Go back to the process we were practicing last week if you're not super strong, because anyone can make a mistake. October 1st, they collect 5,000 cash for 4 months of music lessons. The lessons run from October 1st to January 31st. So what accounts are being affected initially?
Cash and revenue.
Cash, not revenue. Have they done any of the lessons yet?
Yeah.
Nope. We've got unearned revenue. On October 1st, they collect 8,000 cash for 4 months of music lessons. The lessons run from October 1st to January 31st. Which accounts are being affected? Cash and unearned revenue for dance lessons. October 1st to Jan 31st is 8,000 and 8,000.
Well, it matters if it's music.
Is it music lessons? It was music lessons. Yeah, it doesn't. It should matter actually. Okay, our initial transactions are done. Now comes the end of the year. We want to prepare our financial statements December 31st. So, on September 1st, we collected the cash for a program that ends on December 31st. Have we completed our program?
Yes.
December 31st, yes we have. So do we have any liability left? So what are we going to debit? So our unearned revenue. It's going to go down, which we know is a debit. So what do we need to credit? Yeah, we can do our dance revenue. It's going up, and we'll credit. to adjust. So here we had 4 months that runs October 1st to January 31st. How much of that program have we completed? How much do we have remaining? So how much of a liability do we still have? Yeah, a quarter of the initial. So what do we need to, so far unearned revenue is 5,000. What is a quarter of 5,000? 1250. So we would need to debit it 3750. So we know we're going to debit our unearned revenue. What would we credit? Yeah, our music revenue. So does everyone see why we're using the 3750 amount? $5,000 was for 4 months. So we initially had an obligation, a liability of $5,000 for 4 months. We've completed 3 months of our obligation. We've completed 3 months of our obligation. We still have 1 month remaining. So we need to put in, we need to move 3 months to revenue, and we still keep 1 month remaining in our unearned revenue. What's that, sorry?
I did. 12, wait, when you did your T balance there, was that 12?
1250 is our balance, yeah. But the amount we're going to journal entry is the 3750. Right? Because we're moving 3/4 of it to music revenue. So on October 1st, collected 8,000 cash for 4 months of music lessons. The lessons run from October 1st to January 31st. So how many months was the initial program for? We collected for? 4 months. How much of this have we completed?
3 months.
So we need to convert 3 out of the 4 months from unearned to revenue. So what is 3/4 of 8,000? 6,000. So we can go ahead and enter that in. If the T-charts help you, definitely use them in the margins. I've given a few extra pages for notes on the exam, so if you need to write around.